welcome to Billionaire. It's 14th of Jan 2023. Last week we did the Nifty's analysis and analysis was more in line. So this week we will be doing analysis of Nifty again with price action indicators first, then Elliott Wave, and at the end we'll check the option chain. So before we get started, make sure you hit the subscribe button if you haven't already. Do hit like, add the comments, any doubts that you have you can add, and we will be happy to help you with your doubts. So let's get started. First, we'll check the previous week's analysis. So this was the chart from previous week. We expected a bounce in the first session. On Monday, we expected a bounce. So this was chart on 8th Jan and 9th Jan was first session. We expected a bounce first, and then we were expecting a drop on the downside. So more or less Nifty moved like this. So this was the last video, by the way. So this is how we expected a bounce up and then a drop was expected. But Nifty even went beyond the levels that we forecasted and it broken this trend line. It went towards 18,200, I believe. Sorry, 18,140. It opened a gap up and continued that move on the upside. So it was an easy trade for us on Monday at least. And then it was a drop on the downside the next 4 sessions. In last session, it recovered. So we'll discuss how it's going to move next. But yeah, this is how we forecasted in last week. So now first, let's check the price action and indicators, and then we'll discuss different Elliott wave patterns, which is the main part of this video. So indicators analysis is again telling us here that this is acting as a major support, 17,770. It bounced again one more time here. And yeah, the main thing now in this week happened is Aron indicator turned bearish again. So it was sideways. It went towards 50. I was thinking that it will go sideways and then give a breakout on the upside. But last 3 sessions selling, like before Friday, there were 3 sessions where we saw a selling that turned Aron again into the bearish territory. So Aron red line is above 70, green line is below 30, is an extreme bearish signal. So what we can expect here is it can give the pullbacks and then the pullbacks will fail and eventually it will drop. So right now the resistance again is at 7. This is the resistance area. I'm going to mark this now. So I'll expect it to face resistance first near 18,300 because on the upside it might pull back, the pullback might fail, and then again it can start the dip. So it can eventually reach to 200 EMA, or it can even break that and go bearish downside towards this support, okay, towards 16,700. We already explained that with Elliott Wave and all. So now I'm having more confident that as Aron turned bearish, completely bearish, so there is a chance that it will drop towards 200 EMA or even beyond that. So pink line is 200 EMA, 100 EMA is white line where it is taking consistently support many times, and this is 13 EMA, and this is pink blue line is 13 EMA and this yellow line is 48 EMA. 13 EMA has crossed below 48 EMA, so that clearly indicates the trend is bearish to sideways. Okay, so when these short-term moving averages again cross below long-term moving averages 100 and 200, then the trend will be more bearish. So as of now, trend is bearish to sideways as it is trading near towards 100 EMA. Okay, so it can give pullback towards this resistance and then can show the dip. But yeah, it will take a lot of time. It might take some 1 or 2 weeks in this, then it could start the dip. RSI is still below 50, which is considered as negative signal. So this is what the indicators are telling. Aron is turned extreme bearish, and there is a support right now near 17,700, which is acting 17,770 levels. So 770 to 750 levels is what we can expect. Max it can reach, even if it has to come down, then again it can give a pullback towards this resistance zone. So this is very simple analysis as per the price action and indicators. So now we'll do a little bit complex analysis. It will be difficult to understand. Just try to follow me, watch it completely so that you understand how the Elliott waves give you the direction and how many swings are left in up move and down move. These details we can get easily from the Elliott wave. So let's switch to Elliott wave now. So this is our main view of Elliott Wave, where we are expecting price to drop towards this particular support of 16,700, and this we are expecting to be expanded flat correction A, B and C. So here you can see B wave has made one more high, but it did MACD did not made that new high. So here the divergence has formed. So this is price making higher high, but MACD is not making new high, it is making lower high. So this indicates a negative divergence, and because of this I'm expecting it to reset. It might go towards 16,700, and then the third wave will start. So I think first 2-3 months it will be bearish, and in the second half of this year it should be bullish. So this is the primary view. There is a secondary view as well. So for the primary view itself, so this is another chart with more details of the Elliott wave. Wave 1 completed here, A, B and C wave is about to complete here. That's what we are saying. So this we discussed in December 17th, after it started the dip and broken this channel, smaller channel in a purple line. If you see, when it broken that, then we thought that the drop has started, and from there onwards it's not yet it haven't yet pulled back. So yeah, this was the view. Then again on 18th December, similarly we created wave counts 1 2 3 4 5. So this is how it's reaching. And the second view or alternate view is like this, where it can be an leading diagonal pattern with 3 3 and 3 3 wave structure, leading diagonal pattern. So price may fall towards 17,800 to 17,500. That's what we said when we discussed this on 10th December. So this is also looking to be in line view, and the chart is looking valid till now. It has broken 18,096, so there is a chance that it will be a leading diagonal pattern or 1-2-1-2 pattern. So we have to observe how the price behaves. If it takes support near this area and then bounce back and breaks this high, then this pattern will be valid. So this is, you could say, 2 to 3 months view. That's what these couple of charts that are telling us. And yeah, this was the short-term view. Again, we discussed on Jan 1st that this could be the potential movement, and this could be some expanding 3-3 wave structure, leading diagonal pattern. So this chart is also valid. Okay, and the main chart that we discussed, this is also looking valid now. It is not invalid unless it breaks 18,888, which is the swing high. Right now it's far away from that swing high, 1,000 points down from that swing high. So it's better to consider the bearish approach than the bullish approach, because there is a negative divergence, and yeah, there are a lot of negative news as well. So what we explained in this is that it can make one more low on Jan 1st. We explained it can make one more low and then give a pullback, and then the drop will resume. So this is what the view was. And yeah, this is the supporting view to that, like the same chart, but we plotted the waves of fifth wave. And yeah, we shown in last week that this is how it can move in a next week. But yeah, it moved little differently. The chart is more or less same, just that this fifth wave is changing and having a little bit different picture now. Okay, so this fifth wave is looking to be ending diagonal pattern. This chart also we discussed as an alternate scenario and consider and mentioned that as long as Nifty does not break 17,774, there is a chance that it can make one more high. So now this chart is invalid back because this level has been broken. So we can delete this chart and we can ignore this case. So yeah, this is again same case on lower scale, where we mentioned that as long as Nifty does not break 17,774, this chart will be valid. Now this is also invalid. So now for next week, what is happening here? Okay, so this is the chart for next week. This is the chart that I've created before making the video, because yeah, it will be easier and it will be time saving for all of us. So here I'm expecting one more low just below 17,760. It can make low towards 17,760, 750 or 700 maybe. Okay, somewhere near that it can go, and then give a pullback as ABC waves, minimum towards this swing. Okay, because this is ending diagonal pattern here, it can reach towards this and then the dip could resume. So this chart assumes one more thing, that it should not open gap up next day, it should not open gap up, and it should not cross 18, like it should not sustain above 18,000. Okay, so 18,000 should act as a major resistance. In last 1 hour we saw selling here, and this is also 0.6 minute Fibonacci. So this is multiple like multiple reasons for us to go short here. That's what it says. So again, if it opens gap up, then I'll need to review the count, and we will discuss in a next day 1 minute video. So we daily create 1 minute video on Nifty, and in last week almost all were accurate. You can go and watch those videos as well. So here we have a confluence of confirmations. 0.6 Fibonacci as 18,000. 18,000 is a major open interest, call open interest as well, and the price got rejected, created engulfing kind of marubozu here, engulfing candle, bearish engulfing candle on hourly chart. So these are the signals that are telling us Nifty should not open gap up. It can open flat and then start the dip. If it opens gap up and sustains about this for longer duration, then this chart will be invalid. Then again, I don't have a different picture as of now, because based on the moves here, it clearly states me that there is a fifth wave pending, and this was the pullback as a fourth wave. So we will update the chart if this goes wrong tomorrow. So for next session, as long as it opens flat and trades below 18,000, it is bearish as per my analysis. And if it opens gap up, okay, if it opens gap up and then breaks this high near 18,141, then this analysis will be invalid. As I said, if this is broken, then I'll change the wave count. I'll have to look for something else. So hope you understand. We are expecting a bearish, and we are expecting one more low below 17,761. Sorry. Yeah. So this should not be a simple one-way fall in one session. It will take 2 days. It will go like this: A, B, and C. Okay, A, B, and C. So this is how the fifth wave can complete near 17,760 to 700, and then we'll have a pullback wave on the upside. So do remember here, this is the chart. Okay, when it starts the pullback, I'm expecting 18,300 if it starts the pullback, and I'm not expecting a big deep cut from this level, because the price is you can see here making divergences. So this is first divergence. It can make one more divergence and then can give the pullback on the upside. So yeah, I'm not expecting a deep move from here because of the Elliott waves. So we can expect a max move less than this. Okay, so we should not expect anything beyond 17,600. That is also big target. Like if I have already shorted it here, so if tomorrow it opens gap down or starts trading on the downside, I will just look and close my position near 17,750 or 700 max. Okay, I will not hold the position beyond that, because next time it opens gap down, it will start the pullback. That's what I think. That gap down opening, next gap down opening will be a trigger for reversal. So if it opens gap down and breaks below 17,761, next day or same day a pullback can be expected, filling that gap, and then gap fill will tell us that we are in wave A. Okay, wave A should come up and break above 18,000, then we'll have a consolidation wave, and then wave C can start. But yeah, so by the end of next week we should see wave A completed and B wave running. So I think till budget it will move towards 18,300, and after the budget it will crash. That's what my view says. Let me know in the comments, what do you think? So similar pullback we have observed last time as well during the budget, and this I think budget was somewhere here, not here. Yeah, here. Okay, so this was the drop before budget in Jan itself. Then we had a pullback here, and on 1st Jan the budget was announced. 2 days it looked like it is 1 or 2 days it looked like it was bullish, and then we had a sharp drop. So similar move can happen here because of our analysis as well. Like we have dropped in 5 waves, 1, 2, 3, 4 and 5 waves. And yeah, this pullback will fail. After the budget, it will start the dip. So, and that dip will have a larger gaps. So do remember, in next week, whatever the last gap that breaks 17,761, once it breaks, we will have a sharp reversal of 200 to 300 points. And yeah, let's move now. So hope it's clear, very clear, and it will take 2 to 3 sessions to break this. And then I think on Thursday and Friday we should start the pullback waves. So let's see now option chain and understand what is happening here. On the option chain front, here you see a little bit different picture. Here option chain shows you that 18,000 is acting as a major resistance. You can see here, okay, 18,000 acting as a major resistance, and highest call open interest, whatever side it's there, that acts as a resistance. Actually, it's 17,900. You can see here bigger number than this. So this is acting as a resistance. So that's why even 18,000 it didn't sustain, it touched and then dropped 50 60 points, it dropped sharply. So 17,900 is major resistance. So after that we have 18,000 as a second major resistance. You can see here clearly people are very aggressively short. There were not much positions covered from this call shorted, like these calls are shorted. So these are multiple resistances on the upside. So even after I think 150 odd points move, the people didn't exit their positions from this area. So this indicates there are strong resistances. On support side, the major support is at 17,900. Again, break of this, it will take us towards 17,800 and 17,700. So 17,700 should be easy. Again, break and a close below 17,900 will take us next 1 or 2 days towards 17,700. So this is the main thing that option chain tells us. It's a very contracted range between 18,000 to 17,800, or just 100 points range option chain gives as of now. And yeah, break on the either side will trigger a short covering rally. Even if we have a closing above 18,000 in next week, so that is a trigger for us that it will head higher towards 200, 300. If 17,900 again broken, 200 points dip we can expect, max towards 17,650. But yeah, even 17,700 may not come. We might just touch and break this one. Just like in the last session, everyone thought that after breaking this, it will again drop. Yeah, it broke this, okay. But yeah, most of them thought that it will again be bearish, but that didn't happen because of this larger move already happened. And this is just a pattern to complete the ending diagonal. So this is forming a wedge like structure. That's what I believe. So let's see how it happens in next week. But yeah, option chain does not have a much data here. Very tight range, 100 200 points tight range, and a break of one level will take us to next level. So that's all. Hope you like the analysis. Do let me know in the comments, and do subscribe to the channel. It takes a lot of effort to create these videos. So do make sure to add the comments. Thanks a lot. Have a great day ahead. Bye bye.